So, my brother, the way I will trade these things is that first things that I want to understand is I understand structure. What is structure telling me? So the moment I get to a point where I understand the structure, then I'm gonna mark my point of reference. Let's say example, we're gonna start from here. I'll know I have this I that give me this low. Then this low give me this higher I. Then another thing that I want to check is okay, where is the level of demand that could hold the price? So this is the area that could hold the price. I'll wait to see the reaction from this area. Now, one thing that I see is that markets come and break this level, take out this low. So when we take out this low, then I'm gonna wait for a pullback. That pullback for me to take a sell again, to come with a sell to the downside. So where is my last point that I'm gonna mark? So I have this zone here, the zone on top. I'm gonna mark that zone because this is a supplier level. Then another zone that I'm going to mark from here is gonna be this block, the one that is there. So I'm gonna mark there. But if I go to other time frame, because of this week, I'm gonna get a precision. But I'm trying to explain about your zone. So let's say if I go to M15, you're gonna see, I'm gonna check also this zone here. You see this zone here. But at the same time, if you're using, let's say, QML, you're gonna say this I is the I of QML. This I is the I of QML because we have the I, we have low, we have the higher I, then we have the lower low here. This demand zone, market didn't respect it, then market push to the upside, check where the body close. Why I say I'm going to select this zone? Because this area here is just a manipulation, but sometimes when you use a tight stop loss, it's like 5 pips. 5 pips is okay. At least if you use 10 pips or 15, your stop loss maybe can be up until the higher there. But one thing that you need to keep again in mind is that, okay, markets return to the upside, then you use this area. But what do you see here on M30 or on M15? Do you see that last candlestick before they sell? So we're going to mark that zone also to be our supplier level. Then this area here we have here is what we call as a liquidity. This one was it created a liquidity on that area. It's not like because we see all this area, the one that is here, market is going to come and hold from there. So we need to pay more attention that the target is going to be for them to take out this I when they're coming to the upside. So yeah, then okay, let's see what happened. Now check what happened. Because here on M15, what you're going to see, they grab this liquidity for the first time and second time. But if you go to M30, then you're going to see the block, that supplier level is a bit huge up until this zone here. So market touch there. Since there is no precision on that zone, let's say if you want to use the open candlestick, you're going to do like this. You just select the open, then you target maybe the I. It's going to be how many pips? That is like 6 pips. Yeah, you can check this entry. Then you target maybe the low. Then another thing that you want to do, let's say you doubt the zone. You are not sure if market is going to hold at your zone. So what you need to do, now you need to refine your entry. You want to see what market is telling you. You want to see how market is going to play at that entry. Then this one, I'm going to go to maybe M5 for my entry. More I use M5 or I use M3. So let me just get M3. Because M3, I like it. M3 is, for me, it's quite fine. So the things that you want to understand is that, okay, we have this zone. If you check here on this compression, how market was going to the upside. Do you see this compression, the way market was going to the upside? So the way it was going, it's like a normal structure. You follow your structure, whatever, but this was just a pullback to go to the upside. Then from here, what I'm going to mark, I want to mark the most significant level for me to see what is going to happen. The same way I explained on M15. This is the same way I'm going to do again this side. So I want to see where is the last major swing that was being broken for me to be able to define my entry. So sometimes I want to see these things happen before I take my entry, because this entry here is the higher risk entry. Why I'm saying is the higher risk entry? Because market maybe can come, drop, small, then continue again. So I want to see market break a measure point. That measure point is the one that is going to allow me to do what? To be able to take the entry. Another thing that I want to see for me to take the entry is that where is the last price imbalance where we can say, okay, this is our demand level, sorry, this is our supply level, then I'm going to hold the price from there, I'm going to take the price there. So I'm going to say this area, this is my last point. Then check what happened there, market get there, and fake out there. But even if you take this entry, remember this is the higher time frame supply level. Let me delete it so we keep this thing simple. Then this is the zone that also I'm going to look for me to do it, to take an entry. I can take my entry here, let's say here, then I can put my stop loss maybe up to, let's say here you can check, it's like 2 pips or whatever. See, something like this. I can even say, okay, let me put 5 pips. I can go up until 5 pips. Even 3 is okay. Let me just keep it 3, simple. And then this can be my first entry. This can be my first entry that I'm going to take. Now, from here also, if you want to continue taking entries, like keep on adding entries. So I want to see again how market is going to break this area. You see this area here, the low here. Why this low? Because this low was the one that gave me this higher point here where the movement started. The movement started here. Or if you want, you can even use this low. The one is here because that is almost close to where market give you. You can say, okay, this is the low that give me this high. You see from here to there. Then where is my decision point that I'm going to look at? Then you're going to look at this decision point. If you want to take another entry, you can take another entry. But remember, we have also this candlestick, this higher one. So we have also this candlestick from here to there. I'm going to mark also that one. Let's say maybe I put a line. I'm going to put just something like this. You see, I put something like that until the eye. That's also going to be my zone. Most special look to take the entry in between here. If markets return to the upside again, that is going to be the level that I'm going to look, because this one first, because we have a drop, bears, market drop, then markets return here. So I have the first entry, the second entry is here. In case market return again back to the upside. So this last candlestick here is going to be my zone that I'm going to look for entry. So let me put even another line here in between, because I have the ident base there. I'm going to put maybe at the 50% of it. Then let's see what happened. You see what happened. So this entry, let's say if I update my stop loss at the break even, this entry, they'll take me out, but this one will be my entry. So let me show you what I'll do. Okay. Let me delete everything here. So this area is here. If you can check, this is the zone that I'll say I'll look for entry up until the top. Then I select my zone. This is my zone. If I want to take the entry, what I'm going to do, I'll do something like this. I'll take the entry from the open. Maybe first entry can be from the open. Then I'll target the higher point. Let's say the higher point is there. I can say maximum I can go with 5 pips. I'm okay, I'm fine with it. Then I drop to the downside. You see what happened. Then from here, market did drop. So this one is like whatever, how do you call this thing of RR, 1 to 11 straight. If it goes to your level, if you stop here, is 1 to 10 already. So this is just a straight way of how I'm gonna take my entry. So this is how I look at the market, and this is how I take most of my entries. So I'm avoiding to take most of these entries right now because of this one here, because it's a bit risky. It's a risk entry, but this one is a reduced risk entry. This one is even more than better entry for someone to take, because you are taking an entry with higher confluence. Why we have this first pull back to the upside to this area? Because we break this area. And why we have this new one? Because we took out this low here. Then this one, I was telling you the first time that I'm going to look for here why market is break this zone and how am I going to take my entry. Then check this momentum, loss of momentum going to the upside. You see, we have a loss of momentum going to the upside. Already it's a sign, it's telling me that market is not going to do it. Market is not going to continue buying. So market is going to do what? Market is going to sell. So I need to check that. Sometimes we call it compression, but if you want to look it in terms of a smart money concept, is like market is losing momentum going to the upside. Already it's a signal to show that, okay, this market at a certain area is going to do what? Is going to sell. And for people that they're using volume, whatever volume, I'm sorry, I just mark it there. Anyway, so guys, that is it. Let me try one more volume and try to see. Let me just check the fixed range, maybe session volume, and let's see where there was a volume. You see on this red line, this is where there was a volume. There's a bit high volume, and this is where market. So this one, for people that they're trading with this volume, what they will do, they'll take the entry from here already. They're saying, okay, this is their level because they see there is a volume that is there. So market is gonna respect that as on. This volume also is good because it's telling you where there is higher volume. So let me show you another example. I'm sure I need to go to H3. Let me go to H3. Do you see why GBP USD was buying here? You can check from GBP USD why GBP USD was buying here. We have this supplier, let's say demand level. Then from the demand level, what you see, market come and react already from the zone. So now check what happened. What I was looking at, I was watching structure, the way structure was playing. For the first time when market come to the downside, market respected the continuation pattern. When you talk about the continuation pattern, we see we have SR, like let's say RS flip, then from RS flip we have SR flip. Then okay, there is a new name, a new brand, or the one that we call how do you call this name again? SNRC1, SNRC2, you see. And when you go to Michael, you're gonna see also he's calling them mitigation block and breaker, you know, those kind of stuff. So they are the same concept, it's just that they keep on having different names like every single day. Then imagine if market could come to the downside, what is market going to hold? So I have this zone, I have that area there. That is the area that I'm expecting market to come and hold. So let me try this session volume. Do you see my area there I mark? So it also have an institution movement there. So when market is coming back to the downside, that is going to be the first level I'm going to look for another buy. So sharp guys, enjoy.